Hey, what's up, everybody? James Walker here, real estate agent here in North Carolina with ERA Strother Fisher Group. And today we're going to talk about conventional loans. And I'm with Renzo from Mondello. He's going to talk about conventional loans, what they are, what they're not, and the pros and cons of both.
Hey everyone, this is Renzo Russi with Mondello Mortgage out of Fayetteville, North Carolina. And today we're going to talk about, as James said, conventional loans. So conventional loans are basically the most normal of and most flexible of loans. Conventional loans allow you to buy primary, secondary, investment housing. They also are better suited to those who have excellent credit, because the conventional loan is going to be priced more aggressively, better rates with those with higher credit. Another benefit is that the conventional loan does not carry mortgage insurance for the life of the loan. So if you put down less than 20%, you will have a mortgage insurance up until you have the loan to value becomes 78%, at which time it automatically goes away. You also have the option of putting down 20%, in which case you will start your loan without any private mortgage insurance.
Okay, so is there a certain amount I should put down for a down payment? Is it zero down payment with conventional, or is it?
With conventional, the minimum down payment, and I guess I should specify, there are different kind of flavors of conventional loans, but the absolute minimum down payment requirement for a conventional loan would be 3%.
Okay, 3%.
Yes.
Okay. So if I buy a $100,000 house and I put down $20,000, and of course $80,000 is now what I'm borrowing, there would be no mortgage insurance.
Right. So you put down 20%, and that loan would start with no mortgage insurance.
Okay. If I put down 10%, then of course when I get to $80,000, my house is $100,000, then it drops off.
Well, when you get in this case, when you put down, let's say 10%, as you pay off the loan, once you get to 80% loan to value, you can request it from the bank.
Oh, okay.
They don't have to give it to you. But once it gets 78%, that's when it automatically goes off.
Okay, 78%. That's what you did say that. And you said it's great for investors, secondary mortgage, stuff like that.
Right. So it's a very flexible loan. They're also the appraisal is also a lot more lenient than the other loan programs, since you can have an investor wanting to buy using conventional loans, secondary home, or a primary.
Okay. Is there a certain credit score you look at, since you are saying it's for people with usually excellent credit?
So yes, but the minimum required by us, it depends on the lender, like I said, but we're going to be looking at least a 620 credit score.
Okay.
Depending on the actual credit score, then that's going to determine heavily what kind of interest rate they receive.
Gotcha. Okay. And you said it's the most flexible with appraisers. What do you mean by that?
For example, FHA appraiser would look at chipping paint, and that would be something to remedy on the appraisal report. A conventional would not really look at that. So
Okay.
they're not looking so much as heavily in safety and habitability as the other loan programs would.
It makes sense. I guess if I'm an investor and I'm buying a foreclosure home, it's going to look a little, I would say run down, but it may. Mm-hmm. So at least they're a little back off on it, like, okay,
Yeah.
we're not going to do something like that.
They're just more lenient on what needs to be repaired and what can stay as is.
Okay. Now, is there any, I know I could use it as an investor, but is there any, could I get extra money for a rehab? If I wanted to buy a foreclosure and I need money to rehab, is there anything like that?
So you can actually get a loan. It's going to work similar to the 203K FHA rehab loan, in that we're going to be looking at the after repair value. Yes.
Okay. So if I'm buying it for $100,000 and it could be worth $140,000, you guys would look at, okay, we may let you borrow $40,000 to rehab it to.
Well, we wouldn't go to 100% loan to value,
okay.
But depending on what the actual value is, and then obviously it needs to have a second appraisal after the repair to make sure that the value is there.
Okay, I understand. Is there anything else that I'm forgetting to ask you about with conventional loans?
Basically, it's the accessibility of a conventional that makes it the most appealing. It also allows you to have a lot, maybe 4 people that can go into buying a house, whereas FHA limits the number of occupants since it's supposed to be for owner occupants. But I would just say it's the flexibility, and really, if you are able to do a conventional and an FHA, you definitely want to weigh the pros and cons of having that mortgage insurance fall off at some point, and also what kind of rate you'd be able to get depending on your credit score.
So I could go into a conventional loan with, that you saying up to 4 people, so I get, like, if I had
But you can do more. You can have, there's not
so
necessarily.
if I had an LLC, or if I had a business partner, I could do
Yes,
that?
yes.
Okay.
For example, an LLC wouldn't be able to buy a primary residence. It would have to be a conventional loan.
Okay. Thanks for your time. I appreciate it.
Thank you for having me.
If you have any questions about conventional loans, I have my information and Renzo's information in the link below, in the description below. Thanks again. See you guys in the next video.
Bye, everyone. Thank you.